Good morning, everyone. I hope you're all doing very well and welcome you to another preview video for the week ahead. So on face value, we have a choppy close, I suppose, 10 last week. We'll obviously be looking at the charts in a moment. We had heavy sell-offs last week in the indices. We saw a little bit of recovery into Friday, so it'll be interesting to see how does the markets fare on, particularly in the first kind of 24, 48 hours of this week, to see is that temporary relief rally that we saw on Friday sustained, and can we get a little bit more of optimism in the markets this week? Of course, if we were to look at the crypto markets, we've seen considerable volatility. We're seeing anywhere from kind of 10 to 20% moves on an intraday basis. We're seeing 15% rallies followed by 7-8% declines, and the volatility in the crypto markets is obviously here to stay for the near term anyway. But I suppose from our goal, it's to assess the price action in the broader markets. It's to give a conscientious viewpoint for participants and to allow, I suppose, objective reasoning when it comes to fundamentals, when it comes to the price action, broadly speaking. So first thing out today, just when we get our economic calendar running for the week, just bear with me now, I'm just opening up this. We can see that on face value, we have quite a lot of data this week, right through until Friday's close. So I suppose first things first today, when we look at the market today, the key elements of consideration, well, firstly speaking, overnight was the Chinese retail sales data, 11%, absolutely horrific figures. And broadly speaking, even the industrial figures, the industrial production has declined as well. Of course, that's on the back of lockdown. So the Chinese economy has, I wouldn't say come to a standstill, but it's definitely seen a lot of hardship in recent weeks due to the fact of this contagion effect of the COVID outbreaks that we're seeing pretty much across China at the moment. So as a direct result, what's happening? The Chinese economy is suffering detrimentally. So 11.1% decline in retail sales is a massive figure. And that's going to help put some downside pressures on the markets today. So of course, the broader narrative is that when China catches a cold, the whole world catches a flu. So we want to see these figures as high as possible for the broader global economy. Now, as we speak, of course, Chinese figures very, very poor overall. So that's going to add a lot of downside pressures to the markets. Now, of course, in the ECB, we had the Panetta speech this morning, just after the open at 8 a.m. We had growth forecasts as well coming out of the ECB. So again, a little bit of volatility this morning. But I suppose the big things that I'll be paying close attention to this afternoon is this Bank of England monetary policy report hearing. So that'll be worth keeping an eye. It's just coming out just before the open, around the open. So worth paying close attention to that. We do also have Fed Williams speaking again today. So we have, of course, we'll have a number of Fed speakers this week giving their latest comments. Early Tuesday morning, late Monday night, we have the RBA minutes. So that's after the recent RBA interest rate decision. So it'll be worth paying a close attention to that, because that could drive markets, particularly during the Asia session in Aussie and potentially even Kiwi pairs, as Kiwi does tend to move in sympathy. Tuesday morning, we do have a bit of data out of the UK. Claimant counts, unemployment rate will be, I suppose, the key figures. Of course, the narrative coming out of the UK at the minute is that they are nearing inflation, nearing recession and having double-digit inflation growth. So there's a lot of economic pressures starting to be placed on the pound. We've seen the pound drop, particularly against the dollar, from under that, I suppose, from approximately that 130 handle back to as low as 122. So I suppose the objective viewpoint now would be, how does the pound perform given that weaker broader sentiment, and will we see cable hitting that 120 handle as well? So it'll be worth keeping a close eye on that over the next couple of weeks. We do have ECB GDP data, so that will be important tomorrow, year on year and also Q on Q. So 5% is the projection there. So anything above 5% is generally good and will be a boost for European-based indices. Anything shy of that will obviously put some upside pressures on the markets, and we could see some sell-offs. So just factor into consideration. Q on Q 0.2% shows that there is a little bit of a slowdown starting to play. If that had been month on month, you'd say it's not too bad. But given that this is Q on Q, 0.2% is a fairly underwhelming figure, broadly speaking. We do have Bullard coming out on Tuesday. We do have US retail sales. So there's quite a bit of data coming out on Tuesday afternoon. Now, we do also have Fed Chair Powell coming out on Tuesday evening with Lagarde. So pretty much close, one following the other. So it'll be interesting to see, because this could be market moving territory on Tuesday evening. Every time Powell tends to speak, it does move the markets from an arbitrage and short-term trading perspective. So it'll be worth keeping an eye on his comments. And of course, Fed Mester as well at 6:30 p.m. So that rounds off Tuesday. We do have GDP in China or in Japan as well. GDP is expected to be marginally lower, so that will affect the markets broadly speaking as well. Wednesday, we have Wednesday is going to be an interesting day, because we've got PPIs and we've got CPI output out of the UK. So it'll be worth watching this. Of course, if this CPI index is greater than 9.1%, that's going to put a lot of pressure on the UK markets, particularly speaking, and we could see declines starting to come in. So the previous figure was 7. The new consensus figure is 9.1, so that's a hefty increase, a 2.1% increase. So even if we're above that 9.1% level, that's going to be difficult for the markets to take. Of course, month on month, we're going to look for a 2.6 consensus rather than the previous of 1.1. So anything above kind of 2.7, 2.8, even as high as 3% month on month will definitely move the markets as well. PPI output 12.7%. So it just shows that the UK at the minute is really struggling with PPI, producer price index and consumer price index figures and data at the moment. As we look at kind of towards Wednesday afternoon, again, we have Bank of Canada, we've Bank of Canada CPI core index coming out. We have, broadly speaking, 6.7%. That's year on year. The core figure, we're looking for around about 5.5. So again, anything above 5.5 and 6.7, like let's say, for example, 6.9, if we even see a 7 handle there on CPI, that will move the markets in the Canadian dollar as well. So worth factoring that into consideration. Broadly speaking, and normally speaking, when you have higher inflation figures, it'll generally make the currency a little bit stronger and will weaken the indices in that play. But at the minute, we've actually seen a role reversal in the pound. We've actually seen the pound getting walloped, and we've seen the FTSE rally. Now, the reason why the FTSE has rallied in recent weeks, broadly speaking, is because there's a lot of inflation-led stocks in the FTSE 100 index. So that's why there's a little bit of a counterintuitive narrative there in the pound. So we're just kind of being mindful or being conscious of that as well. So overnight, Thursday night, we do have a raft of data out of Australia and New Zealand. We have employment data, we have budget releases, we have employment changes. So we're keeping an eye on that. And then, of course, as we look at Thursday being the busier day of the week, we do have a 1:30. So I do have to also change my timing on this. Apologies for that. So, of course, just factoring that into consideration as well. There's a default here set up, so that's just why there was an error behind. So, of course, on Thursday, as I said, let me just reconfigure the calendar. As we look at Thursday, we see that there is obviously the initial jobless claims as we get every Thursday. We also have the Philly Fed manufacturing service, so that would be one to watch as well this week. It is expected to be underwhelming for May, so 16.7 is the consensus. So we do want to have it as high as possible, and the markets have priced in a reduction in the figures from a previous of 17.6. Now we do have ECB de Guindos speaking as well on Thursday, so from a European perspective, for those European traders, it'll be interesting to see what his comments are. And then, of course, we do have a number of minor data out on Thursday afternoon as well. So that pretty much rounds out Thursday. Friday, we have a number of data on Friday. We've pound retail sales, GDP retail sales with European PPIs. We've got Bank of England's PIL, which is the economic advisor. He is speaking. ECB Lane is also speaking. We've got consumer confidence out in Europe. We've got PBOC's interest rates. So we've a lot of data out Thursday night into Friday morning. So we're expecting a lot of volatility here as well to end off the week. So that's from a data perspective. We have quite a few pieces. We've got multiple governors speaking. We've got a lot of key important data out in a multiple of jurisdictions: Europe, China, UK, US, Canada, Aussie, and the Kiwi as well. So just factor that into consideration. Now, of course, when we look at the broader markets, just kind of a few charts I've kind of keeping an eye on here. That, as we said, this sell-off we looked at last week off the back of FOMC 2 weeks ago, and Bank of England. We've seen the price action gradually kind of flag lower negatively. And we saw that kind of rally on Friday into this area here around 32,200, 32,300. Now, broadly speaking, the markets at the moment are quite underwhelming. As we look at it here, we see how the markets are grinding higher with little enthusiasm. So the goal here would be like to see the price action continue moving to the upside, get back into these levels to create this next broader dip opportunity to allow for the next run of selling. However, at the moment, we're seeing a lot of chop, we're seeing a lot of volatility on the shorter time frames off of these arbitrage and news trading events. So you just want to factor that into consideration. Now, of course, on Friday, on the Dow Jones, there was a lot of kind of short-term support around this 31,900 level. We even can see it here, a lot of wicks forming, a lot of wicks price action getting a lot of significant bounces, albeit on the shorter time frame parameters. So I suppose from my perspective today, it'll be worth seeing how does the price action react around this level here, making sure that the price action sustains above this region to allow that kind of more buoyant upside move accordingly. If we break through this level down here, 31,900-ish, if we're closing out this area here, we could well see the price action on these indices slide further lower. And at that point in time, the area then becomes this focal point down here at these nearer term lows at 31,350 into the 31,200 handle. So on the NASDAQ, again, a very, very similar scenario here. So even on the 1 hour, if we drag it down, we had this consolidation last week. Volatility, the CPI dragged it lower. We then trended higher. We then saw that nice little upside retracement into the weekly close. But we're seeing these weekly wicks, or the 1 hour wicks, form to begin the week at around about this 12,200 level. So this is kind of a fulcrum point that I'm paying particularly close attention to today to see, does this level hold up? If so, we could well see that deeper run to the upside into some of these higher levels that we've kind of looked at into this area up here around kind of 12,750, 12,800 into this 12,900 area. We're seeing a little bit of an area here as well. So this would become a nice little focal point if we did see a little bit of optimism in the indices. Now, of course, with the Chinese retail sales overnight, we do also have to factor that into consideration as well, that the trend at the moment, the broader trend, is very much tilted to the downside. We are seeing sell-on rallies. So we had this massive rally, we sold off. We had a rally here, we sold off. We had a little bit of a recovery here, we sold off again. So very much downside pressures playing out. And of course, it's worth keeping an eye on those fundamentals just to get a consensus of directional output or bias from the larger institutions as well. Last but not least is the S&P. So the S&Ps on the indices has rallied nicely off this 3850, 3870 level back into this 4,000 level. Nice psychological round number. Now, at this point in time, I was looking for kind of a deeper recovery back into this region to allow for maybe the next wave of cyclical selling. At the moment, we are kind of midpoint. So we've rallied very nicely off this kind of negative flag structure. The price action's broken through. So of course, the focal point this week, or the early parts of this week, is can this area here hold up to allow the price action maintaining itself above this region? If so, if this region breaks, we're probably going to get the indices sliding back into these lows. So this is the volatility that we're seeing on a short-term basis. If you look at kind of even the 30 minutes or the 15 minutes over the last couple of weeks or so, it's quite difficult to run these positions because we are getting sell-offs, we are getting reversals. Sell-off, reversal, we got a recovery, massive sell-off into another recovery. So we are seeing a lot of volatility on these shorter time frames, which makes it a little bit harder to run these positions because of the back and forth movement, particularly on these shorter time frames. So that's what I would always say. If in doubt, zoom out, look at those broader time frames, because it'll give us a little bit more clarity in terms of the price action. It means then we're not kind of sucked into looking at those wicks rather than looking at the broader trends and the broader movements. Now, of course, on gold has very performed nicely off of some of our expectations. We've seen the price action come lower off of this selling handle at 18,600, 1860, should I say, all the way down to this daily region at 1795 into as low as 1785. So we're seeing the price action come back to this region that we kind of looked at last week, which was nicely poised. We did actually break through that 1850 handle. We got a little bit of a pullback back into this region here, back into this relief rally, into further selling, and we can even see the short-term lower lows forming as well. So even on the 1 hour here, we're starting to see this decline play out lovely. Lower lows, lower highs significantly forming. And of course, we're now hitting this key level where we've bounced again. So I would expect a little bit of consolidation I wouldn't be poised to say we're going to break through this 1785 handle just yet. I would like to see how the price action performs, because we have seen multiple waves of bearish price action into a key structural area of interest or point of interest. So it'll be worth watching that into the early parts of this week as well. So 1785 into 1800, you'd expect to see some sort of consolidation forming from here. Now, last but not least, I'm just going to open up the DXY very, very quickly. And we can see how the dollar, having broken through this 104 handle, is starting to flag lower. Now, at this point in time, that would give a little bit of cause. So as the DXY moves higher, the indices move lower with the inverted correlations. And now as the DXY is starting to flag lower, we're starting to see the indices move the other way to the upside. So it would be nice to see the DXY kind of come back into this area here between kind of 103.75 into this 104 handle to flag to create a new low in this massively expansive bullish trend over the last 9 to 12 months, and of course create another dip opportunity to allow buyers to come back into the market. So again, that's allowing for the indices to create lower highs for further selling, lower highs, further selling, and on the inverted side here, we're seeing the higher highs, the higher lows for more upside. So personally speaking, I'll be watching this region of interest here around about 104, maybe slightly below it, just to see how does the price action perform in this region, and then of course looking to see can the price action get another bit of strength in the dollar and slightly weaker indices into the middle part of this week. Okay, so that's pretty much it for the week in terms of data, in terms of I suppose outlook. Of course, our competition is grinding to a close for April, so the results for that will be released shortly on the social media pages. So for those who've entered the competitions, keep a close eye on that, because there is a lot of very, very good performers in this month, and the prizes will be given out accordingly. Have a great week, everyone. Thank you.